Check, please.
Paul, I represent the young and new, inexperienced investors out there, regardless of age. You know, I was duped in the concept of growth stocks are really great because they sound great. They have growth in their name. They're going to grow. They're going to be great. And I admit candidly always that I thought when you talked about value investing, it was this old man curmudgeon club, you, Warren Buffett, and Charlie playing bridge, drinking Coke Zero. What have I mistaken? Because we are now seeing the concept that these growth stocks all of a sudden have gone the opposite swing of growing. They're losing, some of them 80, 90%. People in our community are worried. Do I sell? Do I hold? What is the difference between these two concepts, Paul?
So growth versus value investing. Now, it's funny because value investing incorporates growth. Guys, if you know our software, watch our videos, we have our 8 pillars. We look up a company, call it Advanced AMD Stock Analyzer Tool. Very first line. What's that very first line say?
Revenue growth, what we're expecting.
Guys, 2 companies are exactly the same, have everything the same, except one's going to go 20%, one's going to go 5%. Which one should you pay more money for?
Well, obviously the growth, but I think obviously people are swayed by
there's a difference between
the recency bias of growth recently.
There's a difference between growth of a company's fundamentals and growth of the company's stock.
Oh yeah, that's it.
I
think the better term that they should use, it drives me crazy. I was just telling you before we started, I hate when people say growth versus value. It should be value versus speculation.
Yes.
That's what it should be.
So speculation is when you're buying an investment and you need it to just go up in price because the fundamentals don't justify it, and you're hoping it's essentially the greater fuel theory. Somebody's going to pay me more money, and you don't have any security of principle or adequate return along the way.
So this is, for example, companies that have great growth, recent growth
in fundamentals,
but not a lot of profit per se.
And they're selling for huge multiples because people don't understand the disconnect between fundamentals and value.
Mm-hmm.
They don't understand that difference,
right? And
price versus value. So when we talk about growth, we hear like, oh, Paul, you don't get, it's very easy to say, Paul, you don't get growth. No, I get growth. I 100% understand growth. I'm just not going to overpay for it. Warren Buffett says that value investing is redundant, that all real investing is done with value in mind, which is you sit there, pay a reasonable cost with a reasonable expectation of return, as well as security of principle. So that's how Ben Graham basically did it.
Why do so many investors like me, when I started, I understand the concept, buy low, sell high, but I still get duped into buying companies that my friends are talking about that sound like high flyers in the news.
Very simple. If your friends are telling you to buy a company, avoid the company.
And why are your friends telling you to buy it? Because they see the stock price
Unless,
going up.
They don't
see the revenue and profit going up.
I love when I hear this from people. Paul, did you not see the stock recently? It's up a ton. Okay. Is that why you're interested suddenly? Yeah, look at ARK investment. Over 40% of the people who've invested in ARK have lost money, even though ARK is up since it started. Why? Because the vast majority of people came after it was up a lot. You know what your friends should be? The people in our EM community. Because these people are rational people. They're here because what we say that's contrarian makes sense to them. And there's 6,000 people in this thing and growing every single day. And you can go in there and talk to them about stuff like that. You can talk to them about the difference between speculation and investing. That's all it is. We're talking about speculation versus investing. In speculation, you don't understand how you're going to make money. And I always tell people, if you don't know how you're going to make money, you have no idea how you're going to lose money. And it's going to get ugly. But with growth, with value investing, in basically the term of investing, you sit there and say, I'm buying a company based on fundamentals. If the market perceives the value to be less, it's going to go down. I can buy more shares of a great company as the fundamentals continue to get better.
We were talking to an incredibly intelligent gal in Switzerland over coffee during tea time.
What made her incredibly intelligent? I love how people throw this term out there. I literally hate it. Lisa says it all the time. Lisa said the other day, this person's really smart. I'm like, what makes them smart?
Well,
they have a degree?
I would say, regardless of what you're saying,
and I'm an idiot.
Let me rephrase. She was incredibly well spoken.
You have a PhD and she didn't.
And I guess
he's ignoring me. He has the PhD. She doesn't. He referred to her as the smart one. He should be the smart one in the room.
He is the smartest in this room.
But she thought she was even smarter because
I thought she was absolutely stupid.
Her diversified portfolio had to include growth. absolutely had to smartly include cryptocurrencies, Paul, because why?
She thought, well, what if crypto becomes the next big thing? And it went from what if, that first statement, to it will be. Why? Because countries, nobody's going to trust currencies anymore at some point. I'm like, oh, okay, cool. So how do you get your value out of Bitcoin then when you try to convert it to somebody's currency? That's all it was.
If these value investing concepts speak to you, you can join the Everything Money community. You can get the software behind Paul, and you can have all this in the palm of your hands. By joining the community, you'll be joining thousands of people all over the world who speak and communicate just like you on these topics. We help each other. We work together. We day trade. It's incredible. You get the software, you get the data, and all the amazing tools that are coming out in the future. Go to everythingmoney.com or patreon.com/everythingmoney and join today.
The way I deem intelligence is, do you have a rational thought process? I might disagree with your thought process, but you have a rational one.
Oh, and you were saying that this person
she had no process.
Was lacking that. Because I had been duped, Paul. I actually argue with you on this one. Is I thought I had a process. I bought companies I thought were going to be really good. That was my process. It sounds incredible. In fact, I learned that from people around me who also, come to think of it, didn't really know what they were talking about.
Yeah.
But
well, you don't know what you don't know.
And that's just it. I guess we're looking for those few of you out there that might say, this sounds intriguing.
Mm-hmm.
This is a little bit different than what my friends are saying.
By the way, you can go buy Bitcoin, but don't think you're buying something fundamentally. Go day trade it. Go long-term trade it. Yeah. Your process should be driven based on price movements and not fundamentals. There are a lot of day traders out there. There are a lot of traders out there, like hedge fund guys, who mix fundamentals with a chart. I don't. I look at them as totally separate things. It's kind of like my wife at home, my girlfriend on the side. I don't bring the Thanksgiving dinner together.
That's right.
Nothing good is going to happen.
Nothing ever good is going to happen from that.
Yeah.
Some other people are able to do that. I am not.
Polygamy. Can't do that in Ohio, though.
Joe Kennedy Sr., he liked bringing women together. His wife with all his girlfriends. It worked for him. For me, I didn't like to do it.
Hugh Hefner.
Come on, that is a perfect analogy.
Oh, it's perfect.
Please tell me that wasn't the most brilliant analogy you ever heard in your entire life.
The crickets button, though.
Yeah, I mean, I just
day trade it.
I kind of laugh that growth, boy, they really hit the marketing with the name. It just sounds so great.
It sounds amazing. That's why it drives me crazy. Because
just like the Democrats, when they say the party of we, not the party of me, it's such brilliant BS. I love it.
Every company that I own in my portfolio has growth, but it's not considered growth. Because it's not growing 100% revenue every year.
Well, what's growth then? Is there 10%? Is it 12%? Is it 5%? Is it 80%? Because there are companies that are growing 80% a year. Tesla's not going to grow 80% a year. There are companies that are $1 million and grow 80% a year. Okay. Which one makes more sense?
Do you avoid,
I avoid what people chase. That's all I do.
Mm-hmm.
Literally, I sit there and go, oh, you really like it a lot? I got to avoid that. I'm just programmed that way.
When there's a big line in the housing market last fall and 5 people are putting in first day offers and seeing, sight unseen on properties, you're avoiding that.
Yeah, but when the market crashed in 08, 09, I was buying houses sight unseen when nobody wanted houses. I was buying houses sight unseen because the line was very short.
Yeah.
Look at my favorite restaurant, my favorite Chinese restaurant, my favorite sushi place in Cleveland, Fang in Broadview Heights. Shout out to Fang. I hated it when they started becoming more busy. It drove me nuts. I was like, I want you guys to make it, but really, come on, stay empty, please.
Selfishly speaking.
I'm just naturally built the way of avoiding what everybody else does. I don't drink. I don't smoke. Some people here were trying to get me to smoke weed in Switzerland. Didn't work very well.
Don't point at me.
I'm pointing at you.
That was your girlfriend.
That was my girlfriend. So anyways, guys, growth versus value. Or value versus, because growth is one of the most important aspects of value investing. That's it. It's one of the most important aspects of value investing. So look at growth. It's speculation versus investing. That's it. Google the difference between investment and speculation by Ben Graham. Let's Google it right now. What do you think? I'll read it exactly word for word. On investing, an investment operation is one in which, on thorough analysis, promises safety of principal and a satisfactory return. Operations not meeting these requirements are speculative. The only thing I don't like about this is on thorough analysis. Because most people think that just doing this and seeing that their neighbor next door is buying it is proper analysis. No, it's not. I've seen people literally take financial statements when we're doing a real estate deal. They just repeat the same financials they were given and say, there, I'm doing my research. No, you're not.
You know, the funniest part about the statement that just hit me is the safety of principle.
Yep.
Which the exact
downside risk.
The exact argument that I literally hear from every person that talks about crypto is, well, if I lose it, I lose it. It's only a small amount, Paul.
Well, that's their
Isn't that
justification.
It is a justification,
if I know going
But here's
into
my thing. They
I can
speak
lose
of it like it's going to be, like it will 100% be the next thing in the world. Why are you, when I have 20 stocks that I think are absolutely undervalued, I'm going to have 100% of my money in stocks at some point.
100%?
Absolutely. I mean, because of all the cash I have available. Yeah. Absolutely. I've been there many times in the past. Because I put my money where my mouth is. Valuations are great, 100% in.
That's our take. Be cautious out there with the growth. It's not growing now. So you can ask us these questions about where you should hold on in our chat. We're getting a lot of them. And I guess the point is maybe along with me, you can learn that maybe I should have never got into some of those. And we'll guide you along the way. Fondle thumbs up. Hit the subscribe button. We'll see you next video. Thanks.